everyone. I'm Varnika. I'm Senior Research Analyst at Twimbit. Joining me today is Kunal. Hi, Kunal.
Hi, Vanika.
How are you doing?
I'm very well, thanks.
Thank you. Welcome to Twimbit's Virtual Banking Leadership Insights, and it's a pleasure to have you with us today. So, Kunal, you say that you're a fintech speaker, a business advisor, and a mentor. So, why don't you tell us something about yourself in general and your experience so far?
Sure, no problem. I've been in the financial services area for about 10 years or so now, and I've held various roles across different companies, so corporations, SMEs and startups, both here in the UK, in Singapore, and briefly in India as well, where I was advising companies, supporting startup accelerator programs. So I've got a good broad knowledge of what's happening within the fintech space in these different regions, and of course I've spent a lot of time working from a product standpoint. So building and delivering products and solutions is typically what I've done throughout my career.
Lovely. So when you say that product development, and one of the things that is very essential today is customer experience. So it's what is differentiating the challenger or the virtual banks with the incumbents. So what I think is what's revolutionizing the banking industry are a couple of drivers, or I would say there are, in broad sense, 6 drivers, which I say they're innovation, it's competition, it's regulation, how customer is evolving, what is the culture, and how the infrastructure has completely changed. Do you agree with these drivers?
I do. I think that the 6 that you've mentioned, just to give a bit broader context, these drivers have been talked about for a while now. Certainly since I got into the whole fintech space, and since smaller companies, fintech companies came along initially to challenge the incumbent banking establishments. These drivers are still relevant today as they were many years back. I think one of the key things to point out here is that, and I'm going to sort of pick out maybe 3 of the drivers in particular, which I feel still need more focus, and they're centered on innovation, regulation, and also the infrastructure pieces as well. So for me, whilst all 6 are really important, those 3 stand out because I feel that there's still more work to be done. And of course, regulation, the central banks and authorities have really tried to help foster this sort of collaborative piece between fintech companies and banks. They've made it easier to a certain degree for other players to break into these markets and to offer additional services as well. So for me, innovation, regulation, and the infrastructure piece, technology piece, are still pretty critical today.
Interesting you say that, because when you say that they're critical pieces, I feel that some of these form as challenges for the traditional banks because they're still struggling with their digitalization journey when it comes to these drivers. Why do you think traditional banks are facing these challenges?
I believe that with the traditional banks, they're very sort of institutionalized to a certain degree. You've got to think about the industry that they've been in for a good number of years. They're very driven by process, by governance, by frameworks, and that can be a good and a bad thing. And obviously, they're bound by regulations, compliance, and risk, and so on and so forth. So boundaries are very difficult then to overcome. Coupled with the fact that we're in an age now where a lot of customers, the sort of up and coming generations of users, certainly when we talk about digital propositions, want more from their providers. They want them to understand, who they are and what they want, and that's all manifested itself from digital products and services. So you think about, companies that we consume services elsewhere outside of banking and financial services. Customers today want a similar user experience. They want to, enjoy the types of products and services, that they consume. Banking by definition, is a very functional service, functional product. There's very little that you can do to change, how banking is done today from that perspective. What you can do is you look at the design and experience, viewpoint, and certainly the whole purpose of digital banking is to look more on those elements than to try and sort of break the sort of traditional banking functionality that exists today. So I think where banks have struggled by and large has really been on that user experience, user design, and personalization piece, where I think the fintech companies they bring a lot of technical knowledge and capability, but they understand consumer behavior, consumer expectations. So if you put all that together, that's really why a lot of digital products have been successful.
Exactly, because one of the common things that revolve around the industry is that the only innovation banking had was just ATMs. And now with fintech coming into play, user experience playing a very vital role, I think there is a shift. However, do you think that the pressure to innovate among traditional banks is largely driven by these fintechs and what I say is the emergence of challenger banks or neobanks?
I think so. Yeah, I think that the catalyst for banks to innovate has largely been driven by the fintech sector. Up until that point, there wasn't a lot of innovation taking place. People didn't really have a choice. I mean, and by and large, customers tended to stick with whoever their banking provider was. I think the advent of fintech companies coming in, offering an alternative, really kick-started the whole kind of revolution to a certain degree. And fintech companies catered towards the younger, affluent sort of generation as their primary target. And they looked at behaviors of these individuals, as I mentioned before, when they consume other products, and then they decided, well, maybe we need to do something here to provide an alternative to traditional banking incumbents. And of course, the banks initially dismissed the whole the whole idea until they started to see traction amongst these companies. I'm not saying that every fintech company has been successful. Far from it. There've been a handful that have really sort of taken off. But the idea here is that these guys provided an alternative that catered for a particular group of users, and I think that's still the case today. In terms of what they've put together, what they've built, and I think the banks have really had to sort of sit up and take notice. To the point now, of course, where collaboration is the key word here. That fintech companies and banking institutions both need each other, for different reasons. And I think that sort of partnership piece now is a major thing. If both parties want to be successful.
Right. So let me shift gears here to just understand when you're saying that now there is more customized approach. People are understanding what the customer needs are actually and targeting, having a very focused approach towards banking. Where do you think there's a shift? Because what I feel there's a cultural and a mindset shift with the onset of virtual banking, and especially when it's powered and fueled by open APIs or in UK, it's more regulated with the open banking systems in place. So internally, how do you think that traditional banks are operating, positioning their products and defining their business models with there's so much going around, and now even COVID-19 is accelerating the whole digital push?
Yeah, I think that, that there is, there's been a lot of pressure in terms of, open banking certainly coming into prominence. I feel that the technological aspects have certainly been quite critical, and the fact that the regulators, certainly in the UK, and the regulatory changes that have come into effect, allowing these challenger banking organizations to come in and open up things a little bit, have access to sort of data points, be able then to, build and offer, serve digital banking services to customers has really, I think, been one of the main catalysts in this. To the point now where banks, there was a little bit of hesitancy and pushback, but that's now changed. So, example, certainly in the UK, banking organizations, traditional banking organizations have sort of opened up APIs to other companies, other challenging banking organizations to work together. That helps then both parties in that sense, from an innovation point of view, from a collaboration perspective as well. I think that one of the biggest challenge here is in terms of this whole proposition of virtual banking, open banking, initially has been around mindset and thinking. When you talk about these types of propositions and services, the banks, the traditional banks, as I say, were very skeptical about uptake and everything else, and their mindset was very different compared to smaller, challenging banking organizations. So I think that it's been a positive piece now. I'm not talking exclusively about the UK, but in other markets as well. I think both organizations realize that there's opportunity, albeit it started off very slow. But this is, you've got to start somewhere in order for things to develop and prosper. And I think that it's not going to be an instant impact, certainly. And there are a number of challenging banking organizations globally. That none of them have really sort of, I would say exploded. I mean, you could argue Revolut as an example has, but they're not necessarily classified as a bank, but from that perspective. But they're the name that sort of spring to mind. Others, I'm sure, will follow. Yeah.
Interesting. So, do you think that's from the banking side of it? What do you think from customer side? How do customers' mindset have changed? Do they perceive banks from laggard financial custodians to now being banking as a service structures? Do you think that shift has happened? Or there's personally a cultural shift that I can go out, rather than going out to my branch, I can do it digitally. I can have an account in a virtual bank space.
Yeah, I think that it really depends on the users, the customers that you're talking about. So, a lot of people today, prefer to do things via a mobile application. So I think the advent of challenger banks coming along, providing an alternative, having access to customer data, obviously with consent given, and really being able to shape a product that's that fits their particular needs, as opposed to just a traditional bank putting something generic out there that may or may not be what a customer wants. So I think the smaller challenging banking organizations have really looked upon how they can provide something that a customer would want to use, based on their own preferences and so on. I think that's quite key. But having said that, you've still got a portion of customers that still prefer to have an in-branch experience. I don't think that branches will fully disappear. I think I can't. A lot of people have said that you're going to, branches are going to completely close down and go. But whilst we're seeing a trend, certainly in Europe, where there's less reliance on branches now, certainly where they're not being fully utilised, they're being they're being closed down. But the majority, I think will still be in existence, because you'll still have a portion of people that will want to go in and have a very personal experience, compared to a generation that would prefer not to speak to somebody and do everything via an application. Worst case scenario is that they will have to, pop into a branch or, to make a phone call to have a query dealt with. So it's a bit of a split right now, and it really depends on the generation of user ultimately.
Right. Definitely. I agree with that. So, one of the things that challenger banks are really looking out for is this gap, which they feel is the underbanked and the unbanked gap, which lies with SMEs or MSMEs, which they feel that is one of the reasons which led to the emergence of challenger banks, because they felt that SMEs were not getting the loans, they were not rightly targeted. So, do you think that the major clients that are looked out for are looked out by traditional banks, this actually is the critical gap being filled by challengers?
I do, yeah. I think that the short answer is yes. There's a big change underway generally with lending and SME lending. I think,
Right.
look, my opinion is that a lot of the larger banking institutions are a little bit wary of, of looking at SMEs when it comes to loans. Especially now that we're in the situation with the pandemic that's happening right now, and the risk involved in offering sort of lending products and services to SMEs. Challenger banks have come in. They've spotted the gap, as you've said. Certainly in the UK, in terms of numbers, I read a report the other week where I think it was 115 billion pounds. In terms of challenger banks have sort of looked at in terms of record sort of investments and lending to customers from that perspective. That's a huge number, for the challenger banks to have collectively put together in terms of being able to lend to SMEs. So I think you're seeing that now. A wave of challenger banks coming in. Post credit crunch. Obviously, we're in this pandemic situation, and they're willing to take more of a risk, I think, vis-a-vis SME lending than, as I said, a lot of the traditional incumbents that are in play today.
So with that, don't you think that we had this common phrase about banks that they're too big to fail? With challenger banks, we'll have like they're too easy to collapse because they're taking a huge amount of risk when it comes to SME lending. And at the same time, with the kind of low cost that they suggest that they have, and which is getting cascaded to their customers with the interest rates that they're providing, don't you think it's going to be like easier for them to fall off? What do you think would be the challenges in this space?
Yeah, it's a valid point. I mean, it's not without risk for themselves. I think for me, to mitigate those risks, they've got to look at other services as well. Other sort of personalized services to a certain degree, marketplace products, other value-added services that really create that customer stickiness to a certain degree. They've got more flexibility and maneuver than a traditional bank would have. And the challenge for challenger banks has been profitability. It's still an issue today. Do I see it being a problem moving forward? Potentially. I mean, not every challenger bank succeeds. There's only a handful, I think, globally that you could argue that are standout performers, but even they are, they haven't really, been that successful from a profitability standpoint. So it's going to be a slow paced process, I feel, but it really is underpinned by how quickly they can pull together other products, other services, and keep those customers on board, and not give them the opportunity then to look elsewhere. This is a very, one point to make is this is a very, very competitive landscape right now. So, whilst it's great to have competition, it makes it very difficult then to differentiate yourselves, versus your competition, unless you come up with something completely out of left field. To be successful, that'll be the challenge. Is what can they do to come up with other services, other frameworks, etc. that will be of benefit to them versus everyone else. That's how I see it playing out.
Exactly. I mean, I agree with that. And one of the interesting things that you said, customer stickiness and competition, I think that's going to be the way forward right now because for challenger banks to succeed, I think the more important part is customer retention because the cost of customer acquisition is still a pretty high for a challenger bank or a virtual bank because they
Yeah.
need to move a, a traditional banker to a virtual banker. So that involves a huge cost. So with that, it brings me to the last question, and I think what we want as end notes from you, Kunal, would be what imperatives do you think are going to be for challenger banks, virtual banks to succeed post COVID era?
Yeah, I think that the COVID pandemic has certainly highlighted a need for banks to continue their focus and shift on their digital products and services. I think that you've got a handful of banks globally that have led the way from an traditional incumbent perspective. The vast majority are still running very, very behind. And I think that, as I say, this pandemic will force a lot of these banks to shift in digital customer experiences. For me, that's the major imperative. It's like a kick to the bank to say, look, all right, we were on a journey to build digital products and services,
Right.
to stay relevant, to stay competitive. But now this has kind of forced our hand a little bit because in this lockdown that mostly every nation has been in, they've had to use digital services. We haven't been able to go out to a branch to do our banking.
Yeah.
So that really has been the primary focus. Is that the expectation now from customers is that they would want to have a fully fledged digital a product for retail banking in particular. If you don't have that, then of course the customer will look elsewhere. So that's something to kick about too. So this whole piece around digital customer experiences, digital journeys, I think for me is pretty critical. The other thing to look at as well is adoption of other next generation technologies. I think that one of the key things that banks have been really trying to do is evaluate how they can best use the data and insights that they have, but not necessarily be able to fully utilize them. So companies have talked a little bit about these disruptive technologies such as AI and so on. I think that there's certainly room for them to do more in this space and to at least start to look at how some of these technologies can really help them continue to deliver value through the digital products and services that they're building right now. So that's something to look at. You've got to remember as well that the fintechs are already utilizing a lot of these technologies, which is why they exist. They're tech driven, tech led, whereas a bank is more business driven, business led, as opposed to technology. So legacy systems are a problem still for banks, core banking systems as well. You're not going to modernize a core banking system, but what you're going to try to do is utilize other technologies to help help deliver value and deliver additional services in that sense. So for me, that's something to look at. And of course, being a product person, you've got to think about software development and continuous delivery and everything else, internally from a banking point of view as well. So that's something that I feel will be a key thing to focus on too. I think those are the sort of two standout things for me, really.
And I think they totally make sense. So they are one of the vital key takeaways that, it's going to be driving the case for banking, especially now that we've moving towards the post-COVID era. I think that is definitely to look out for. Great. So this was a lovely conversation. Thank you, Kunal. It was a pleasure talking to you, and I really look forward to talk more about this topic.
Thank you so much indeed.
Thank you. Okay then. Bye-bye.
Bye-bye. Take care.
Take care.